Module 4, risk management. So in this module, we're going to be looking at risk management. So earlier on, we spoke about account security and device security. We spoke about Binance and Luna account security and our hard wallet device and cold storage device such as Ledger and Trezor. So we need to make sure that we have in fact gone ahead and activated all the functionality of these security protocols on our exchange account and on our devices to make sure we don't expose ourselves to huge losses in crypto. Next, we're going to look at volatility. So, the crypto space is known for volatility. We will have a look at volatility. Scams, unfortunately, crypto has been given a bad name due to the number of scams in the space. So we're going to look at that, specifically Ponzi schemes and pyramid schemes. And we're going to cover portfolio management, the different types of asset classes, and the risk they bring. So, account security, if we have a look, most recently in South Africa, it's actually quite a mind boggling 3.6 billion in Bitcoin vanishes in hack, along with the owners of South African crypto platform. So, this is actually commonplace in crypto, where we have the CEOs of projects just disappearing into thin air, claiming that they've been hacked. So, in some instances, they have actually been hacked. In other instances, it's a farce. We've also had an incident where the Ledger database was hacked and clients' email addresses were stolen. So, opportunists actually found a loophole here and sent new fake Ledger devices to clients, telling them that it's a replacement for the existing devices due to a problem. So, customers that used and sent their crypto to these wallets were compromised and lost money. Another example, exec who bamboozled clients with crypto jargon plead guilty to fraud of 3.25 million. So this is happening all the time in the space. So we definitely need to be very cautious. So the disclaimer when we say only use or invest the money you can afford to lose, because it is definitely a very high risk environment, but also a high reward. So, next, crypto has been given a very bad name regarding Ponzi schemes. So, some more examples. In Florida, man escapes paying a 4.5 million SEC penalty, Securities Exchange in America, over a crypto Ponzi scheme. So these are all real cases. Another case, a Ponzi operator arrested, FBI agents after them, and the list goes on. Chinese police seize crypto assets worth 4.2 billion today from Plus Token Ponzi. So, more especially, how do you recognize when something's a Ponzi scheme? We'll have a look at some of the points. So, firstly, there's fake platforms offering guaranteed returns. So, this is immediately a red flag because cryptocurrency like Bitcoin and Ethereum, they operate a lot like currencies, like the dollar and the euro. No one can predict what the value is going to be tomorrow. So where someone guarantees a particular return, it's an immediate red flag. Because in the crypto space, supply and demand dynamics and tokenomics will determine price. And we can therefore not guarantee any returns. So, also cloud mining operations, where we have pooling systems, and those pooling systems just disappear into thin air. The next is the referral schemes, where it is a requirement in terms of earning potential for you to refer people and bring people into a scheme. That's another red flag. Also, scam messages via email and SMS, where people pose to be part of legitimate exchanges or companies and get clients to click within links. So make sure you don't click any links within emails, especially on the exchanges, etc. You need to only operate within the space from the inside the app. Request to deposit cash or crypto in order to participate. So another way in term with regard to scams, where we have initial coin offerings or initial DEX offerings or pre-launch of coins, where it is requested that you send a certain amount of either Bitcoin or crypto in order to be eligible. So that's immediately also a red flag. There's also fake Twitter accounts and Telegram accounts of admin members of groups. So also watch out for that. You will not be contacted generally by admins directly on social media. You should be the first point of contact and then they will contact you afterwards. Okay, so we're going to look at volatility. So crypto is definitely a roller coaster ride. We need a strong constitution. If you look at this graph, it is definitely very emotional. So we need to control our emotions. So this roller coaster often comes into being if we try to time the market, where if we want to enter low, buy low and sell high, or vice versa. But generally, what happens, most people don't buy low, but they ape in at the highest level when the price is at all-time highs. And greed gets the better of them because they fear missing out, so they enter right at the top of the market. And then the market starts to correct and the price goes down, and then they obviously go through all these emotions. So we go from optimism, excitement, thrill, euphoria to anxiety, denial, fear, depression, panic, despondence, depression, and then once the market corrects, hope comes back into it, relief and optimism. So there's actually a fear and greed index that closely correlates to this emotional um, roller coaster. So if we look at the roller coaster, it is actually history. If you have a look at the history from 2016 to 2021, it's not an if, but when the market will crash. So this is proof in all these instances 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 instances where the market has such big corrections of over 30%, right up to 70%, and some big ones as well, 54%, 63%. Also, Bitcoin, according to, has died 416 times, where it crashed and then it rose from the dead again. So, obviously, social media and the normal media, they feed off sensationalism. So, they obviously want to sell and get likes and reviews and shares, etc. So that also feeds into the volatility with a lot of FUD in the market, fear, doubt, uncertainty. So, how do we combat this? What is the solution? We need to try and take away the guesswork of timing the market. So, risk management, one of the solutions is DCA, dollar cost averaging. So, if we would take an example, this is the best way to actually remove the guesswork out of it. So, for instance, if you had $1,000, you would divide it into 10 fractions of $100, and over the next 10 months, irrespective of what the price of Bitcoin is doing, every Monday of the first week of the month, you are going to go and purchase $100 worth of crypto. And you will find that over a period of time, it will average out and work in your favor, thus taking out the guesswork. Other method, in some instances, someone might have a big portion that they need to invest, like $10,000. And in this instance, we might use an example of trying to divide it in 25% portions. So in 1 month, once a week, we will invest $2,500 so that we spread our risk. So these could be the strategies that you could use to try and limit your emotional turmoil. And next, we're going to look at portfolio allocation. So if we look at an example, a pyramid, the base of the pyramid should be one type of asset class, and a lot of people might have solid investments in terms of property, bonds, etc., that can make the base of the pyramid, which is low risk. Then we have moderate risk, like stocks and shares, and high risk investments. So crypto falls under the high risk, so the tip of the pyramid. So the largest part of your crypto, the largest part of sorry of your portfolio should be the low risk, moderate risk. Crypto should be a very small part of your total portfolio. So, in general, you should not invest more than 5% of your total wealth in crypto, as it is very high risk. So, later you might find that crypto does perform quite well, and you might find that your crypto investment becomes eventually maybe 30% or 40% of your total portfolio, in which case you might have to rebalance your investment. So, in keeping with that, the best strategy would be to hodl. So, a buy and hold strategy, because you will find that the market is in an uptrend generally with crypto because it's a fantastic technology. So, we know with time that the crypto market will definitely appreciate. So it's not a short term investment. We need to see it as a long term investment. And with time, if you've got a hodl strategy where you hodl majority of your crypto, 80 to 90%, and you could use different strategies of trading 10% and diversifying the other 10%